Hello and welcome back to Market Brief After Hours. It is a wild start to the week, to say the least. We are seeing history being made in the precious metals market, a lot of nervousness around trade wars, and somehow, amidst all that chaos, Wall Street is still managing to find a way up.
It really is one of those days where you have to look at the screen twice. You have this massive flight to safety, gold and silver going parabolic, but at the same time, equities are bidding up ahead of what is arguably the most important week of the quarter. We've got the Federal Reserve meeting and a massive chunk of the S&P 500 reporting earnings. It's a fascinating contradiction.
Let's start right there with the U.S. equity markets. Despite the geopolitical noise and the trade threats, the major indices actually closed green. What do the final numbers look like?
They did. It seems investors are positioning for stability, or perhaps they're just hopeful about the tech earnings. The S&P 500 advanced 0.50% to close at 6,950. That's a solid move considering the macro backdrop. The Dow Jones Industrial Average also found its footing, adding 313 points, or 0.64%, to settle at 49,412. And the tech-heavy Nasdaq Composite gained 0.43%, closing at 23,601.
So we have the S&P at 6,950, the Dow at 49,412, and the Nasdaq at 23,601. It sounds like the mega caps were doing the heavy lifting again.
Exactly. When things get uncertain, money tends to hide in the giants. We saw Apple up around 3%, Meta Platforms up 2%, and Microsoft adding 1%. It's the classic playbook. Buy the cash-rich fortress balance sheets before the Fed speaks. But beneath that calm surface, the durable goods orders were a nice surprise. They jumped 5.3% in November. Even if you strip out transportation, they were up 0.5%. So the underlying business investment is actually showing some resilience, which justifies some of that optimism in stocks.
Let's hop across the Atlantic. It seemed like a fairly positive, albeit cautious, session in Europe as well.
Cautious is the right word. The Stoxx 600 edged up just 0.24%. In London, the FTSE 100 barely moved, managing a tiny gain of 0.05% to close at 10,148.85. The standout was probably Italy, where the FTSE MIB rose 0.26% to 44,950 points. But not everyone joined the party. The French CAC 40 slipped 0.11%, and the Swiss SMI dipped marginally by 0.04%.
I noticed Germany was flat too. Was there specific data dragging on sentiment there?
Yes, the German DAX was largely unchanged at 24,950, and that was due to disappointing data from the IFO Institute. The business climate index there has stagnated at 87.6. It just shows that the industrial engine of Europe is still sputtering a bit. Also, looking at specific European movers, Ryanair took a hit, trading almost 2.23% lower. So while the UK is showing signs of consumer resilience, the continent is still a mixed bag.
Now, moving to the Asia-Pacific region, the mood seemed significantly darker. This is where the trade tension headlines really seem to bite, right?
Absolutely. The tariff threats from the U.S. are front and center there. Japan took it on the chin. The Nikkei 225 fell sharply, down 1.72% to end at 52,885.25. The broader topics was even worse, dropping over 2%. The yen is strengthening and government officials are warning about intervention, which always scares equity traders. South Korea's Kospi retreated 0.81%, although interestingly, their small-cap index, the Kosdaq, went absolutely berserk, surging 7%.
That is a massive divergence. What about China?
Relatively quiet. The CSI 300 was flat, and Hong Kong's Hang Seng declined just 0.26%. I think traders there are in wait-and-see mode regarding the U.S. import taxes and Canada's refusal to pursue a free trade deal. It's a geopolitical minefield right now.
Okay, we have to talk about the real story of the day. Commodities. I feel like we use the word record too loosely sometimes, but gold and silver are doing things we haven't seen before.
This is historic price action. Gold has moved into completely uncharted territory. It settled at $5,056, up 1.36%. It actually peaked intraday at $5,111. We are seeing a massive flight to quality. Investors are looking at potential U.S. government shutdown risks, aggressive tariff rhetoric, and they are just dumping cash into hard assets.
And silver?
Silver was even more explosive. It closed at $108.52. That is a 5.09% gain in a single session. It traded in a range between roughly 103 and 117. That is a vertical, parabolic ascent. It's driven by intense speculative interest and that same safe haven demand. When silver moves, it really moves.
Before we get into the energy markets and the currencies, which are showing some very interesting technical signals, let's take a quick break. Welcome back. We just covered the explosion in precious metals, but the energy sector was a bit split. We had a winter storm disruption, yet oil prices actually fell.
It's a bit counterintuitive, right? You'd think supply disruptions would spike prices. We lost about 2 million barrels per day of U.S. production over the weekend due to the storms. That's roughly 15% of output. However, oil traders are balancing that against broader demand fears and U.S.-Iran tensions. Brent closed down slightly at $65.79, and WTI was down at $60.84.
Natural gas, on the other hand, did not miss the memo on the weather.
Not at all. Natural gas surged. It broke above $6 for the first time since late 2022. It closed at $6.50, but futures were trading as high as $7.44 at one point. That is a sharp demand shock caused by the cold weather and the outages. It's up around 68% year-to-date now.
Let's shift gears to the Forex market. For our listeners who track the technicals, there were some major breakouts today, particularly with the euro and the pound. Let's start with Euro USD.
This was a decisive breakout. The euro closed at 1.1882, up 0.51%. What's critical here are the moving averages. The pair is now trading comfortably above its 50-day simple moving average, SMA, which sits at 1.1674. It's also above the 100-day SMA at 1.1668 and the 200-day at 1.1596.
So it has cleared all the major hurdles?
Exactly. That separation from the moving average cluster suggests the medium-term trend has shifted firmly to the upside. The next psychological target is 1.2000. As long as it holds above 1.1820, the bulls are in control.
And the British pound?
Similar story. GBP USD rallied to finish at 1.3681. It's well supported above its 50-day SMA, which is at 1.3366, and the 200-day SMA at 1.3412. It's making higher highs. The immediate resistance is the session high of 1.3713 with eyes on 1.3800. It's a very clean technical uptrend.
Now, the Japanese yen has been the other side of this coin. We saw a massive drop in USD JPY.
It plummeted. USD JPY closed at 154.07, down over 1%. This is a sharp rejection from those multi-year peaks we saw recently. Crucially, it has fallen below its 50-day SMA, which is at 156.49. However, it is still holding above the 100-day SMA at 153.55 and the 200-day SMA at 149.64.
So it's broken the short-term trend, but the long-term trend is still technically intact.
For now, but if it breaks that 153.30 level, which is near the 100-day moving average, we could see a much deeper correction toward 149.
And finally, for currencies, the Swiss franc.
The Swissy is strengthening, which means USD CHF is falling. It closed at 0.7766. It's entrenched in a downtrend, trading significantly below the 50-day SMA at 0.7972 and the 200-day SMA at 0.8047. Those averages are now acting as a formidable ceiling. The bears are definitely in the driver's seat there.
Before we wrap up, let's look at the individual stock movers. We had some big swings outside of the main indices. What caught your eye?
A few interesting stories. First, USA Rare Earth. The shares jumped 8% after the U.S. administration disclosed a stake in the company. That's obviously a strategic move by the government, and investors loved it.
And on the flip side?
Revolution Medicines took a beating. Shares slid more than 16%. Reports came out that acquisition talks with Merck collapsed over valuation disagreements. That's always a painful blow for arbitrage traders.
I saw Nvidia is making headlines again, not for their own earnings yet, but for their investments.
Right. CoreWeave rallied 6%. Nvidia agreed to invest an additional $2 billion into them to accelerate AI infrastructure. It just shows the AI capex boom is far from over. And one more surprise, Land's End. The retailer surged 33% after announcing a joint venture with WHP Global valued around $300 million. A massive move for them.
So looking ahead to the rest of the week, we have the Fed meeting and more earnings. What should we be watching?
The focus shifts squarely to the Federal Reserve's policy statement. The market is expecting a hold stance, but everyone will be parsing the language for clues on future cuts. If there is any deviation, expect volatility. And of course, the tech earnings. They are the litmus test for this rally. If they disappoint, given how stretched valuations are, it could get ugly. But for now, the market is holding its breath.
It's certainly going to be a week to remember. We'll be here to break it all down as it happens. If you find this useful, please follow Market Brief After Hours on your favorite platform. Thanks for listening.